Hey, everybody. Welcome to tonight's Trade Stocks webinar. My name is Jeremy Blossom. Let me know if you can hear me loud and clear. I'm coming at you from Orange County, California, which feels like Texas. It's been a massive heat wave. I'm sure you guys have all seen the news. We've had all sorts of fires starting. It's always a scary time of year, but this heat's no joke this time. If you guys can hear me, let me know. Where are you guys from? We're waiting for JC. He'll be here any minute. I'm opening up the room just a little bit earlier. Yes, thanks, Jeff, for asking. Yes, everything's okay by where I'm at. Luckily, we're in southern Orange County, where it typically is okay. Usually, the middle of the state gets hit the worst. So I appreciate you asking. Yes, Itai, he says, at least we don't live in the Texas humidity or don't have the Texas humidity. That is true. But you know what? It feels like we do. In fact, this morning I was out and it was 87% was the humidity this morning. Yeah, Kyle, for sure. Georgia does have a different kind of heat. All right, from South Dakota. Thanks for joining us. Florida, so Philip, you get the heat for sure. You understand it. Chicago, you know, it's my favorite time of year is coming up in Chicago. So I used to live in River North, and it's a little pocket just on the other side of the river, the Chicago River, in downtown Chicago. I had an apartment there, and I'd fly back and forth from Orange County to Chicago, and I love that city. There he is.
What is up?
JC's in the house.
Talking to Giancarlo.
Oh, our favorite.
Together next week. Nice. I think we're going to have to do this session remote next week.
Okay. You're going to do it on the road.
I guess. Why not?
Yeah, I like it. That's going to be fun. All right, everybody, you hear it first. We're going to be doing a road show.
Road. That means we need road sodas.
We need our roadies. That's right. We need to get.
Yep. I think that lady complaining about my drinking in these videos and the fucks that I said is going to have a problem with the road sodas.
Uh-oh. Well, this is an adult show for sure. And we speak our mind. We tell it like it is for better or for worse.
Jeremy, it's not like you need to say fuck every other word, right? Like, right. You know, oh, fuck this, fuck. It's not like that. But sometimes if you really want to get your point across, it's like an exclamation point. Like, oh, these meatballs are fucking delicious. You know what I'm saying? Like, it's not like a bad word. You're just reiterating, oh, these meatballs. Or like, do you see the size of this fucking base in gold? You know, like, tell me I'm wrong.
I'm not going to tell you you're wrong. Definitely not going to tell you you're wrong. I think that I think that there is an artistic manner in which you can use swear words that really does do a better job of articulating a situation, right?
Yeah.
And so and you know what, the type of guy that you are definitely not one that on the cuff just says it to fill in the blank. I know people who don't have a very good vocabulary. And they usually just drop that in there as adjectives to describe everything, right? Let me, hey, give me my fucking cup, please. And you're like, wait, why does it have to be like that?
It loses value if you're diluting it.
Exactly. It's like an artist just uses one color. You know what I mean? Like it starts to look really dark or really bright or really yellow because the whole thing's yellow. So anyway, we digress.
How was your last Thursday? I know you were too busy. You were too cool for school to hang out with me in Straza. What, did it go well for you? Was it as good for you as it was for me?
You know what? I actually got to watch you and Straza go back and forth. That was really fun. I watched the recap of it. I had to see what it was like on the show without me. My biggest compliments to Strasser for holding his own. He brought some really good value. And it was really cool to see you guys go back and forth. I actually was filming a TV show, JC.
Ooh, fancy pants over there.
Yeah, the Discover Network reached out to me and back earlier this year, and then COVID happened, and they had to push things back. So I can't talk about it very much, but in January it'll be coming out. It's a 1 episode. That's it. It's not like a whole season or anything like that. And,
well, not yet. I mean, shit.
Maybe you know who really, my Jen, if she's watching, was the best, man. She really needs her own show. And she did not hold back any punches. We'll see how they cut it all, but I think she was hilarious. I think she was great. And I literally told her, I was like, you could do this. Like, this was something, you were very natural at it. She's like, I loved it.
And then hold on. So this is like one of those singing shows where you have like judges and you have to sing songs?
No, it's like where you get in a group and you dance to music, right? And there's like other groups and you guys are all kind of
like a Dancing with the Stars?
Kinda. No, I'm just kidding. It's nothing like that at all. It's not even a singing show. Yeah, no, it's up, but it was really cool. So I apologize. They said they were supposed to be filming earlier that day, and everything got pushed back. So I was supposed to be done in time to do this. I told them that
it's the Price is Right for millennials, right? On the blockchain. Right?
So it's that's exactly. I can't even say anything to that because I actually that was really funny, and I mean that was great. So what I'm loving about this is that what this night is all about is bringing value in education. And we've got people from all around the world. We actually have somebody here from South Korea. Thank you so much for joining us. We've got somebody from Venezuela. Thank you so much for joining us tonight. Or it's probably late for Venezuela, early in the morning for South Korea. So thank you both for making it to today's charting room. And we sent out in this week's invite a little bit of a hook. What us marketing guys would say would be like a hook, like a lead in, which is there is something that JC has prepared that we actually want to go through. So here's how the flow works. If you've never been here before, first and foremost, this is all about education. This is not a solicitation to buy or sell any securities. We recommend that you talk to your own financial advisor or whoever you need to speak to before you do anything. And this is definitely not a solicitation to trade stocks in any way. We do cover real stocks. We actually have real trade signals that we will identify in the marketplace. And you're free to take this as education, research, whatever information, but it's not a solicitation to make a trade. The format is really fun. We usually begin by bantering with one another. Then JC will show me what he's drinking in just a second. Hopefully it's something good this time. And then
I'm drinking something shitty.
Oh, is this a bad day, man? What happened, man?
You think I'm going to drink something bad? Of course I'm drinking something good. Hopefully it's something good. Come on.
Right. So he's going to get into that in just a minute. And then what we're going to do is we're actually going to break into some education. So we've got about 10 minutes worth of education that we want to go through. And then everyone's favorite part is charts, charts, charts. So what you can do is, this is a very like interactive night, okay? We want you to raise your hand. We'll give you the mic and you can talk. You got a specific question, throw it in the chat feature. And if you want us to look at a specific chart, drop it into the chat feature when I say, hey, drop in your charts. Don't do it yet because it'll get lost in the feed and we won't see it. So that's how tonight's gonna go. JC, what are you drinking tonight?
Drinking something a little special for me anyway. Like this is kind of like, you got to be a wine nerd to really care about this. Otherwise, but I'll tell you why this is important for everybody. So this is Caran. So this is from the south of Rhone. This is a beautiful, it used to be a Côte du Rhône village and a named village. And then in 2018, they got their AOC status, which is the Appellation Organisation Domaine, something along, you know, AOC, Contrôle, something along those lines, which basically means AVA. The French, what Americans is AVA, for French is AOC. They invented this shit. So we copied them over here. In California, you have your AVA. So a good example of this would be in Sonoma, right? Sonoma's been an AVA forever. Napa's been an AVA. But within Napa, you have like sub-AVA. So you've got Rutherford, St. Helena, Calistoga, right? Oakville. In Sonoma, now you have new ones. You have Sonoma Mountain. You've got Moon Mountain. You've got different sub-AVAs within a larger AVA, right? So this is kind of like that. More, Moon Mountain just got their own AVA. This just got their own AOC, right?
Okay.
And, it's right in between Châteauneuf-du-Pape and Vinsobres. And you're going to spend $13 on this baby, and you're going to spend 50 on the Châteauneuf. So, not to be hating on the Châteauneuf, but for a Thursday night with Jeremy, with all due respect, we're going to go with the $12 one,
I don't know
I don't know how to take that, really.
Yeah, well, very cool. I'm actually going to be drinking out. Check out this mug, dude. It's my my Bob Ross.
I love it.
Coffee mug, and it says on the back, we don't make mistakes. We have happy accidents. And a fun fact about this mug is that when I have coffee in it, it turns hot. It actually turns into a painting.
Wow, you are fancy.
You like this? My kids.
That is something.
They make fun of me for it because they don't know who the guy is, and I just saw in the box that it changes colors, so they got it so they could see it. And I was like, I actually love Bob Ross, and you will too one day. His son is like exactly like him. I don't know if you've seen his son.
No, I haven't. Is he? Is hilarious. Of course he is.
Literally identical to it. So. All right, man. So I know that you wanted to go, and we promised everybody that we're going to get into some really great education. So looks like everybody's settled. We got a lot of people here tonight. JC, take it away.
I was thinking about this a lot because you guys are like, all right, JC, let's make it a little educational. Let's give some stuff. And I'm like, well, geez, Louise, where are we going to start? I mean, and I had just had a conversation about breath, and I got a really cool video coming out tomorrow. So I'm going to save the breath conversation, and I want to focus on relative strength. I was on the phone today with a good buddy of mine. His name is Ian. He lives in Virginia. This guy is just a chart machine. And there's that ATM I was telling you about, Itai. So this guy's a chart machine, and he's like, JC, when you talk to somebody, proverbial, general you, when you talk to somebody and they're not a technician, they're not a technical analyst, you show them relative strength and you explain it to them, it's like their heads explode. Because they're just like, they get this aha moment of like, wow, that's actually really valuable information. Yeah, no shit, right? Like, yeah, hello, what the hell do you think we're doing over here, right? So he mentioned that, and he made such a great point because I, for sure, take for granted the value that relative strength brings to me. Because for me, like, it's just common sense. Like, if you're not looking at relative strength, like, what the hell are you doing? You know what I mean? Like, do you not brush your teeth at night either? Like, right? It doesn't make any sense.
Yeah.
So let's take a look at a good example. So what are we looking at here? We are looking at a chart of the emerging markets, the countries, China, Brazil, Russia, India, right? The BRICS, if you will, BRIC. And in light blue, we're looking at emerging markets. And this is going through the end of 2013 and into early 2014. And just so you know, this is a real case study. This is an old chart of mine. If you notice, this doesn't look anything like the charts I have now, because this was 2014. This was 6 years ago. So needless to say, we have a lot better technology today than we did 6 years ago. And when you and I are doing this from our yachts in the Mediterranean, in 6 years, we're going to make fun of the charts that we're looking at now, right? That's the idea.
Yeah.
Yeah, that's right.
Hell yeah.
I like
exactly what we're going to be doing.
That's exactly right.
We're gonna
all right. So what are we looking
them out
at?
and spit on them.
So on this particular March date, I'm sitting at my desk. Let's see, it was March 2014. So what am I doing? This was 2 weeks before I met Morgan. Fun fact, my wife and beautiful mother of my beautiful child now. So this is true. 2 weeks before I met Morgan. So fun fact. On the same day, Jeremy, emerging market stocks, Brazil, China, Russia, all make new lows on the same, on the same day. On that same day, India's making new highs. Hello. Something fishy going on here. Something funky. And I was writing about it at the time. I'm like, when you see these things, like which one doesn't fit, like which one doesn't make sense, you know what I mean? Like you get in those like SAT questions or whatever, or those stupid tests. I don't even know if kids still do that. When I was a kid, I used to say, hey, all these stupid tests that tell you how smart or dumb you are. And I remember being like, which one doesn't fit? Well, this is that. And India's making new highs as emerging markets, Brazil, China, Russia are all making new lows. What happened? Well, over the next several months, India rallied 34%. The S&P was up 6%. China's up 6%. Emerging markets up 11%. India, huge outperformer. The information was in the relative strength, Jeremy. There was wisdom in the relative strength, showing that strength in its peer group amongst weakness in the rest. Should it be a surprise that India had such a huge outperformance over the next 6 months? Number one. Number two, while India was up 34% during that period, Indian small caps were up 70%.
Wow.
In that 3-4 month period. So the lesson here is the relative strength amongst its weak peers, right? People are like, well, JC, the financial crisis of 2007, that came out of nowhere. Like nobody saw that coming. No. Just because you didn't see it coming doesn't mean nobody saw that coming. It was actually quite obvious. And this is a great example of relative strength. This is the opposite of relative strength. This is relative weakness. With new highs in the S&P 500, financials on a relative basis had already peaked well in advance of that, and we're already rolling over, right? Somebody knew something. Financials didn't just crash out of nowhere. It's not like they made all-time highs one day and just started crashing. That's not how this works.
Right.
It's a process. Here's the S&P 500 making new highs into October of 2007. Where was Lehman Brothers while that was happening? See that?
Yeah.
Where was Lehman? Was it making new all-time highs also?
No, it's not.
It was under massive distribution. If you didn't want to see that, if you closed your eyes when you looked at the chart, or God forbid, didn't even look at the chart at all, I mean, what are you telling yourself here? Lehman is a good value buy? No, this thing's getting sold. So it went to zero, as we all are aware. The S&P 500 was making new highs at this point. Lehman Brothers was nowhere to be found. That relative weakness, that distribution is classic, right? There's wisdom in relative strength, or in this case, relative weakness. Let's flip it upside down. Look at 2016. The Nasdaq makes new multi-year lows in February of 2016. While that is happening, what are semiconductors doing? Are they making new lows?
No.
Nope. You know why they're not making new lows? Because they're under accumulation. That's what we call relative strength. Are you surprised at the dramatic outperformance after that? I'm not. Why? Because that's relative strength. That's why we look at relative strength. So I've said it in the show before. Think about relative strength as like when you put a giant beach ball underwater in the pool. You can feel that beach ball wanting to get above the water, and it's you feel a pressure on your arms, right?
Yeah.
And when you let go of the beach ball, the ball shoots up into the air. Why? Because that pressure has been released. In the market, it's the same play. It's the same thing. When the market's under pressure, stocks in general are selling off. The ones that are selling off the least, that are still pushing up against those highs, when that selling pressure in the market is no longer there and it's released, which are the first ones to shoot up like that beach ball? The ones pushing up.
Yeah.
Right? That's relative strength.
That's amazing. That's a really, really good analogy. And
I didn't make it up. That goes this from Joe Fahmy. I
I
just steal them all from my friends. That's how this works.
You always give credit where credit's due. The fact that you went and used something like the India versus China, right, analogy there to go and show something, I love that. Because I think that a lot of people get, they use examples like, let me show you, Apple versus this or something like that. Well, of course, the iPhone came out, and they'll try to use these things as like, to discredit the power of technical analysis and specifically this type of indicator. And another thing I really liked about what you just said too, for me, is relative strength works just like relative weakness works. The most common thing you hear is relative strength, right? But I think that it's important that you look and monitor both sides. Some people, I know I could do this. It's a weakness sometimes. We only see one thing, man, and that's what we want to see out of it. We will try to like rationalize and like, well, is it really the low? And like, is this really, no, maybe, let's give it a little more time, and we'll try to rationalize something. And really, it's like if you could look at both things and have, it's like fighting with one arm. If you're only looking at relative strength when you're analyzing everything and not looking at relative weakness as well as the other indicator, you're running into a fight with a disadvantage. So I love the fact that you touched on that as well. Jay said that look at ACN, the RSI relative strength since April. That looks very, very nice. So he sent it to us. If you want to pull that up.
Yeah, no question. This thing's a beast. You want to pull it up?
Yeah, go for it. So this is a censure.
Mm-hmm. See that?
Yep.
You know what we call those things? Uptrends.
Yeah, there's nothing fancy, folks. You know how much money uptrends make?
Usually more money than buying stocks in downtrends. That's for damn sure.
That is a
so listen, just another great example, technology stock, dominating communications, media, technology. I mean, that's really where it is. What's the market cap on this baby? What is the market cap on this baby? 150 billion on its way to 200 billion, apparently.
Yep.
This thing's a beast, man. This thing's an absolute beast. I mean, what do you want me to say? Animal. Look at this thing. This thing's a beast.
Yeah, it's crazy.
All right, you want me to show you? You want to show you some stuff?
Yeah, let's get into it, man.
All right. I got these no talent ass clowns telling me, to quote the great Office Space movie, that we're heading into a deflationary spiral. That's the way they're really being dramatic when they call it a spiral.
I took the words out of my mouth. So that sounds dramatic, JC.
Dude, the more dramatic, the higher the VIX, the higher the clicks, right? That's how that goes.
Yeah, true.
So the idea is to scare the shit out of people. That's the goal. No. So I don't know what deflation they're talking about. Lumber's breaking out to all-time highs. I don't know if you heard that. Lumber futures breaking out to all-time highs is the opposite of deflation. Okay, so I just wanted to start with that.
Oh, wait, JC, this is a good point. Someone said that you forgot to say fucking ass clowns. So
I got to get the movie quote right. You can't just throw a random fuck there for no reason. The quote is, what was his name? It was, they were making fun of the musician Michael Bolton because the character's name was Michael Bolton. He's like, I'm named, my name was great for all these years, and then all of a sudden this no talent ass clown shows up.
And yes, that's right, Michael Bolton.
Is it Mike Bolton? No, it's Michael.
Michael.
All right, I got something for you, Jay. The same no talent ass clowns telling me about a deflationary spiral are also telling me that stocks are in a bubble, right? Obviously. Like these are like the same people saying the same nonsense.
Yeah.
I don't know whether they're looking at their charts upside down or with their eyes closed, or maybe they're drunk. I don't know what's going on over there, like what's going on between the ears. But what I see is the strongest stocks in the world, the Nasdaq 100, right?
Yep.
The strongest stocks in the world. There's no index on planet Earth that looks even remotely close to that one. I think we can all, even the bears will agree with that.
Yep.
So the strongest stocks in the world have done nothing relative to their alternatives for multiple years running. So in other words, the strongest stocks are flat to down relative to what else people can buy, bonds and gold. And we are just now breaking out, as you can see here, breaking out in bonds, in the Nasdaq relative to bonds. And we haven't even broken out in the Nasdaq relative to gold. So people are telling me this is a bubble. I'm telling you, maybe this bull market hasn't even gotten started. And we're in such infancy stages. If the strongest group of stocks on this great planet Earth have done nothing and made zero progress compared to their alternatives for several years running. I mean, you're going to tell me there's a bubble. I don't see it.
Yeah, it's a really, really great argument for that. And I do hear that. And, I would love to meet these people, right? And really.
No, you don't want to hang out with those people.
I'm more saying it as like a, as a
educational perspective.
Rhetorical,
Like going to the zoo, and just see what's going on, see what these animals are doing.
That is exactly right. You know what I mean? Like, okay, yep, the lion's being a lion and the zebra's being a zebra. No, I really would, because like it's fear. And this is so, like, people just don't understand. It's honestly comes from childhood trauma. If I'm being really dead serious, all of us go through some type of traumatic events during our life. Some people are lucky and it's less trauma and it's relatively normal lives. Other people have much more traumatic things that happen to them. And what trauma teaches us is that what goes up must come down. It won't last forever. The sun will set, those types of things. And so when you see that the stock market has made back all of its gains from from what COVID had knocked out of the market, so to speak, and where we were at coming into this was an 11-year bull rally, the trauma, this is just this emotional thinking, automatically says, okay, well, then this is it. Finally, the party's over, right? The same thing that happened to me when I was a kid, insert trauma, is going to happen again. And we go through life expecting that. And the truth is that, like you've mentioned in other shows, bubbles are the best time to buy. They're the ones that go like absolutely to the roof.
Bring me bubbles, baby, all day.
Yeah. And so you get contrarians, and you've got really nice people with really nice portfolios that they turn into complete garbage because they're playing the contrarian. And they miss out. They miss out on true wealth accumulation, either because they think they're Warren Buffett, or that he's like the smartest guy that's ever lived from a trader standpoint, which he's not. He's a different type of investment philosophy. So yeah, those are things that I think that are really relevant to say. And you need to ask yourself, if you're watching this, what types of emotional trauma are you bringing into your thought process? We all have them. And technical analysis allows us that objectivity. Technical analysis allows us that objectivity to look past the emotional exuberance that is on TV, on social media, in magazines. It's everywhere, right? Anyway, I'll get off of my rant, but you get what I'm saying.
I just let you go because I agree with every word you're saying. To me, I find the whole thing humorous. I get a chuckle out of every day, watching these perma bears get freaking smoked, losers. Nothing makes me happier. These gloom and doomers just, again, clowned every day. I don't even have to say anything. They're embarrassing themselves. And I think it's a good thing. I think it's a good thing that people that make a living or try to make a living fighting trends are just getting steamrolled. That's just so good. It's just good for society in the same way that Macy's being a zero is good for society. Like a company like that serves no purpose in our society. Like, that's a zero. Get it out of here. You suck, bro. You did everything wrong. You know, companies that are going bankrupt, good. See ya. You know, let the companies that are shining and doing good things and adding value, you know, let them succeed. At the end of the day, it's a win for society. If the consumer wins, I'm in. Like, let's, you know, the disruption, these Wall Street banks. Oh my God, dude. When I was coming out of college, like having a job at Lehman, or I had a job in Merrill, which was like, ooh, I could like brag, you know, I got pulled over, you know, in like a week before my internship started. And I'm like, I can't get a ticket. I have an internship at Merrill Lynch. And like the guy was like, oh, wow, that's very impressive. You know, and I don't even think we got, now that I come to think of it, I don't even think we got a ticket. And we were flying down the Long Bridge and the Keys. It was on like Memorial Day weekend. Like, we were such idiots. And I'm pretty sure that fact that I didn't even say it, the other guy, the guy that was driving, said it. He's like, well, this guy is starting his internship at Merrill Lynch in New York City next week, you know, so how bad could we be? That's a true story.
That's great.
So I remember vividly, you know, these jobs being so attractive. And like, now you talk to the smartest kids coming out of the best schools, none of them want to work at these places. Like, they want to work in companies building cool things and doing awesome things, not these like shitty legacy banks. You know what I'm saying? Like, and they're not going to be zeros tomorrow, but they're not worth the valuations that they are today, right? That's according to the venture capital friends that I talk to, and, you know, the real experts. You know, they're just going to be commoditized. I mean, unless they make a dramatic change, which, you know, for them, it takes too long for them to do anything. So I just love to watch watching a Wells Fargo just, you know, work its way down to zero. General Electric going to zero. Like, these are great things. Like, it's awesome because these are great case studies for us. Like, I don't care about GE. Like, why should I don't have any interest in them? Let it go to zero. Not my problem. You know, these banks, I have zero interest in these banks. I don't have any investments. I don't really care anything about them. Let them go to zero, because these are great case studies. Like, look, kids, look, grandkids, look at what these people failed, what they missed. There was this huge revolution taking place, and they were so busy because they had their heads so far up their own asses that they missed a giant elephant walking past them. Like, these are great lessons. So I think we need to like view it as that way. You know what I mean?
Yeah. What came to my mind when you're giving that analogy about GE going to zero or Macy's going to zero, and you're getting pulled over, they call stocks, different types of investments, investment vehicles. And I like that term, because a vehicle is supposed to take you from A to B, okay? And when a vehicle doesn't do that for you anymore, do you just let it sit in your front yard, right? Or do you sell it? You get rid of it. You don't want it anymore. It's not working for you. And you want to be in the vehicle that gets you from A to B the safest, fastest way possible. It's really that easy. I mean, if you really break all this shit down that we're talking about, it's that easy. It's that practical. Speaking of vehicles, I'd like to see what vehicles you want to buy and which vehicles you want to sell. What is on JC's radar? I know you're going to go over some things I want to talk about. And by the way, everybody, Tim raised his hand before we go. Wait. I like that someone actually wants to say something. Tim, I'm going to allow you to talk. All right, buddy. If you got a microphone, floor is yours. Oh, hold on. Let me unmute you here. Unmute.
What do you got, Tim?
I think you got to unmute yourself. Talking is permitted. No? All right.
Hey, long-time listener, first-time caller. I just want to know, JC, you know, those PE ratios, they're really getting a little steep there. What do you think about those PE ratios?
That was pretty good. I like it. That was nice. All right, Tim. Sorry, maybe that was a little accidental. They call that fat fingering, you know, and you may have accidentally hit a key there. JC, by the way, everybody go ahead and put in your ticker symbols now.
So I was going to make a joke about college and fat fingers, but people are sensitive these days. So I'm going to continue with this consumer discretionary versus staples ratio. And this chart represents, guys, what the buy side mutual fund community is doing. When the mutual funds are long only, they can't be short and they can't go to cash, right? So just understand what their mandate is. So the way they get their, sexy bonuses at the end of the year is to generate alpha, outperform the market. When the mutual fund community thinks that the market's going to go higher, they're going to overweight consumer discretionary, underweight staples. That's where they're going to generate their alpha. When the market gets slammed, they can lose 30% in their mutual fund. If the market's down 40%, they get a fat bonus because that 10%, that's alpha, right? So what they're going to do is if they think the market's going to collapse, they're going to overweight staples and underweight consumer discretionaries, right? So what are what? Discretionaries are home builders, autos, right? All of these things.
Yep.
Retailers. What are consumer staples? The things that we're going to do no matter how bad the economy is. We're still going to brush our teeth and wash our dishes, and we're going to drink beers and smoke cigarettes and all of those things. Those are all consumer staples, right? Consumer discretionaries are breaking out to new all-time highs relative to consumer staples, Jeremy. So what this tells us is it helps answer the question, do we want to be spending our time looking for stocks to buy? Or should we be spending our time looking for stocks to sell, right? I think it's quite obvious. It is the former. We're looking for stocks to buy. Zoom has been, I think since you and I started doing these videos, Zoom has been on our buy list, hitting our target, adding it to the buy list again, hitting the next target, adding it to the buy list again. Like Zoom and DocuSign, just, two good examples. They kind of look the same. Really they were part of the coronavirus index we created in March, remember? Which were the stocks showing the most relative strength. Yep. I didn't even do that on purpose. But that was
a money file because that was a money file.
Dude, the coronavirus index was so ridiculous. Like, go back and look at coronavirus index and all-star charts. Go back and find it and go look at the damn stocks in there. You want to talk to me about relative strength? Those were the stocks showing the most relative strength. We just called it the coronavirus index because the market was crashing because of a coronavirus, right? But at the end of the day, it was just stocks showing the highest momentum readings and relative strength readings. Like, we're not reinventing the wheel here, bro. And the Zoom looks like it's breaking out again. Looks like 380's coming in the Zoom. I got to tell you, I got Johnson & Johnson. I don't care. I said it today. I don't care if you hate the president. I don't care if you don't like monetary policy and you disagree with this. The truth of the matter is nobody cares what you think about any of those things. Nobody cares what you think about the president. Nobody cares what you think about monetary policy. Like, your family might pretend to care. Your friends who have the same opinion as you love to hear the reinforcing feedback loop. It's a bunch of horse shit is what it is. The market, nobody cares what you think. So we need to put that bias aside, especially, listen to me, especially the political stuff. You cannot let that poison your brain and let that impact your decision making. I'm not like Mr. Republican or Mr. Trump by any means, but like the crazy Trump haters that went to cash after the election in 2016, that was probably devastating to their retirement accounts. Devastating. Let that be a lesson to you youngsters that didn't fall into that trap, or even people who could potentially fall into that trap in November or in a future election. Like, don't do that, man. And I lived in Sonoma, not far from Berkeley, and the Bay Area when all that was taking place. So I was around some angry people going to cash, and I'm like, y'all are freaking nuts. And as history would prove, yes, in fact, they were the ones who were nuts, not me. So my point is, regardless of what you think, that, you know, you think the economy and the market are dislocated. That's the best one. Like, what are you talking about? Like, I'm not going to buy stocks because the market and the economy are dislocated because of the Federal Reserve. Like, all right, bro, you're probably a lot of fun to be with at a party. So are the biggest and most important stocks in the world breaking out of basis to all-time highs? Or are the biggest and most important stocks in the world completing tops and breaking down to new lows? Because hello, that's the only thing that matters. And it's quite obvious that the largest and most important stocks in the world that aren't already in parabolic uptrends are breaking out of basis to new highs, not the opposite. Johnson & Johnson, I mean, listen, Jeremy, I've had a lot of success buying smiley faces and selling frowny faces. This is a smiley face. And it is within an ongoing uptrend. So it's not like anything new. And now all of a sudden Johnson & Johnson is working out. Healthcare is breaking out to new highs. Johnson & Johnson looks great. I don't see the problem. And then finally, maybe not finally, but for this mini rant, ladies and gentlemen, this is what we call an uptrend, higher highs and higher lows, going back 20-something years. This is TMO, Thermo Fisher Scientific, just an absolute beast, and on its way to 600. So what has my attention, to answer your question, Mr. Jeremy? What has my attention is that stocks are in uptrends. They're not in downtrends. Gave you a couple of healthcare names. Healthcare is not exactly something that you and I talk about much. There hasn't been much to talk about outside of the medical device and equipment space. We talk about Abbott Labs and whatnot. There's opportunity out there. We're spending our time looking for stocks to buy, Jeremy, not looking for stocks to sell. But you want to know something we have been selling? Hey-o.
Hey.
Hey.
Yep.
So this is Jeremy's favorite gold futures. They hit our target. Our target was hit. And now it's somebody else's problem.
Yep.
I think we go a lot higher in gold though, Jeremy. I just don't know how long it's going to take to digest this overhead supply from those 2011 highs. I don't know how long it's going to take. I honestly don't. Could take 2 days. Could be tomorrow. Could probably not though. Could be a month from now. Could be a quarter from now. Could be never. I don't think it's going to be never. I think it'll be eventually. I don't think it'll be decades. I don't think it'll be years. I think we're looking at probably weeks and months. It's hard to say how many weeks and how many months. So we're just out. Precious metals. What a run.
What a run. Thank you. Very appreciative of that. What about
silver? Same thing.
Yeah.
Is that what you're going to ask me?
Yeah.
See? Come on. Who loves you? Who loves you?
You do, buddy.
Same thing, right? Former support. That was our target. It's turning into resistance. Big shocker, right? There's a reason why that was our target. So this 27 area is churning around there. Let's see how long it takes.
Would you do anything in like the options with some bull put spreads on either one of these? Or it's just
there's lower hanging fruit elsewhere. Yeah, just leave it alone.
I don't like it for that strategy. I'm just trying to think of anything other than just sit and wait and see. So what is your target if it goes up this and you're back in the saddle?
$50. $50.
But where's the break? Like at what price point? As you've been giving me for gold, I was patient with you, very patient. You kept telling me, don't touch it, don't touch it, don't touch it, don't touch it. Then you said go, I went. Silver is something I like gold, but I'm actually like.
You know what I think it's going to be? It's going to be something we don't know yet. You know what I think is going to happen? I think we're going to get some digestion, some choppiness. Well, I mean, we're already getting it. I think that continues. And then what's going to happen is that a pattern is going to develop.
Okay.
And then what I'm going to say is when this pattern completes and this price will confirm that, that's when we know. And right now we don't have that data yet. But that's how I see this playing out. Like we're going to get more data. A pattern is going to develop. I don't know what that pattern looks like, but I know that I don't need to be involved while watching that pattern, right? There's other stuff going on. I don't know if you noticed, stock market's making all-time highs. So there's plenty to buy. You don't need to be like getting jerked around in this damn, in this gold situation. especially after such a great run. Our clients made so much money off of this. What a beautiful trade this was. We were so patient, rewarded so handsomely, and I think we'll be rewarded again upon the next move higher.
By far one of the smoothest, that was one of the smoothest things that I've been, since, you know, I've been doing this. This was a really, really smooth, really, really tight targets that you had, spot on numbers. Wasn't a lot of, you know, when we got into it, it was very, and it just did it exactly how.
But you know why, Jeremy? You know why? It's because, remember, we talk about that analogy. Like, all these people, like, you talk about it because you got in once the party was really raging. Like, you showed up at the club at midnight.
Yeah, right.
You know, these people showed up at the club first thing in the morning to help set things up and help set the DJ booth and, you know, carry the records and the booze in the crates, you know, up the ramp. Like, that's what these people were doing. You think these people have the same story you do?
No.
No. You waited for your boy to be like, yo, Jay, it's popping off, come through.
Yeah, exactly.
And then you show up right at the right time and you're like, yeah, this is rock, you know?
Yeah.
But the people that got there in the morning to help set up, like, they were exhausted by then.
Yeah, it's true. Yeah, that's exactly what it was. It was really great, man. It was really just spot on. That was a fantastic call right there. So, all right. So GDX, you like this going up?
I did. For right now, I think we have, you know, our target in the mid 40s was hit. So in the same way that silver, our target was hit, gold, our target was hit, GDX, our target was hit. Like, let's just let them chill out. You know, I mean, who knows? Let's just wait for the data. You know, I think we're going to look back to the end of July and we're going to say, you know, early August, you know, in the future. And we're going to say, Jay, remember, you know, when we were like being patient and that, man, that really, my bet is that we're going to say, hey, that patience and just getting out of the way when our targets were hit really paid off. I don't think we're going to say, shit, we really fucked that one up and really missed up. I don't think that that's what we're going to say, right? So that's probably the best way for me to put it. I think that we're going to be thankful that we were patient in this particular scenario.
I do too.
How about that?
I like it because this big base that's forming here just shows that we're not done, right? And that there is some upside, and it's going to be probably a big move, like you said, 2,500. I also see 50 silver, and so if we get in at 40, I mean, I'm just not saying that's what we're going to get, but let's say that's when it starts to all kind of come together and it gets to 50. I'll take that 25% movement all day.
I'm saying, you know?
Yeah.
So those are sort of the things that I have in my head. We had our monthly conference call this week for clients. Had 175 charts in 65 minutes. New personal record.
Yeah, nice. I like that, JC. I like that.
New record. That's true. That is true.
My team.
I said this before, and I'll probably say it again. I don't know if I'm ever going to break that, Jeremy. That's a lot of charts.
That is a lot of chart.
165, 175.
You know, behind you, next to that Mike Tyson picture, you should put 175 up there.
Yeah, kind of like a Will Chamberlain, like hold up the thing.
You got
I like that.
And like, I got 175. You did it on this day, you know, and like, all right, I don't know if I could do it. And then at the end,
but then like nobody's there to watch, like Will Chamberlain. Like it's like this myth, maybe it may or may not have happened. You know what I mean?
Can you? What are we talking about here? We're talking about JC's service. This is a service that everybody here, probably a lot of you are already his clients. If you're not a client, we're going to talk about a little bit later on exactly what you can do to get started with him. But JC works with the smartest guys in the room. These are our big institutions and hedge funds that pay him for his genius, his ability to see what others cannot see and to decipher what other people cannot decipher. He also has retail investors. What do we mean by retail? Me, guys like me and you, people who obviously are not paid like JC. JC is like the golf pro, right? And I'm the guy that like tags along and like carries his bag for him and stuff. And every now and then he gets to let me go up there and I hit a couple balls, right? That's what we are. You go and you give us advice on, hey, you know what, there's a bunker, it's 200 yards out. I wouldn't use that club. It's a terrible idea. And he's got a massive following, you guys. He is he gets more inbound traffic to this blog than probably any other technical analysis. He is going to be in the Hall of Fame of technical analysis. I see books.
Whoa, is that a thing?
It's going to be a thing. I think that we are seeing our generation, our age, our generation has put such an emphasis on technical analysis, more so than any other generation before us. And I think it's because of technology and our ability to see it. Charts 20 years ago, I had a guy when I was, as you guys may or may not know, I worked at a hedge fund for 7.5 years. There was a dude that came in and he wanted a job as an analyst. And I kid you not, JC, he comes into his meeting, he sits in the front office, and next to him were these giant rolls, like massive, like, tubes, okay? And he brought them all in. And he comes and sits down in the conference room. He picks them all up. I literally had to help him with a couple of them. He leans them up against the wall and he starts to talk to us about what he does to predict, his markets. And the dude is laying out charts. He is unrolling charts, bro.
You remember his name? Do I know him?
No, you don't know him.
I know a lot of these chart guys.
Yeah, but this guy was really fanatical about it. Anyway, he started laying out these charts. And why? Well, because there had to be special computer, and this is 2004, folks. Like this isn't, I'm a young guy, so this isn't like 1982. But if you were around, our age in the 80s and 90s, you just didn't have access to this stuff, man. You didn't have access to the data. You just didn't. And you couldn't do fun things like, plot charts and run, lines on them and like save them and go back to them and change timeframes in 2 seconds. Like we couldn't do all that stuff. So we're here and the tools are more powerful than ever and they work. And so I believe that because of things like this, our phones, we're going to be able to go and see a huge resurgence in this stuff. But people have been patient, and I'd love to get into these awesome ideas that people are looking for. So we've got NVIDIA, Stephanie, thank you so much. She wanted to look at that. Oh yeah, Lulu, you want to pull up Lulu first? Go for it.
Yep, I heard there was some demand for Lulu. We talked about it a couple weeks back. I wear yoga pants. Do you wear yoga pants, Jeremy?
I do.
Yeah, I could see you as kind of like a male MILF, right? Yeah. Lulu, $500, I think is where we're going, man.
Oh wow, nice. Good
this
for
is
them.
an uptrend. This is
Do you know, if the founder still like pickets outside of that company or not? You know about that, right? The guy that got like pushed out, he like.
I have, let's just say I can't really comment.
Okay.
I recuse myself, right? We'll just leave it at that.
Okay.
I've got some friends that
All right, no set. All right, keep going.
We'll leave it at that.
Great.
Ladies and gentlemen, this is why we do what we do. We're let's go back. This uptrend didn't come out of nowhere. From 2012 through 2017, for 5 years, Lululemon did freaking nothing. Did less than nothing. Talk about opportunity cost, Jeremy. 2012, 2013, great year. 2014, market didn't peak till 2015. 2016 was a great year. 2017 was even better, and this thing did nothing during all those times. But you know what was happening? They were bringing in the booze in the crates into the club first thing in the morning.
Yeah.
They were getting new lights, getting the party kind of getting going. And then this is when Jeremy shows up at midnight, right? That's the equivalent situation here, right as they're breaking out. Right as like the DJ comes in, like this is prime time, party time, so anybody who bought that breakout is like, wow, Lululemon is great. But if you bought it in 2012, you're like, oh, I hate Lululemon, right? So, the anchoring bias is real. It is real. It is very, very real anchoring bias. It's pretty hilarious. So needless to say, Lululemon, I think goes higher. And you wanted to talk about which one, Jeremy? I'm sorry.
They wanted to talk about NVDA.
Oh, NVIDIA. Yeah, obviously. Yeah, not a downtrend. Thanks, JC. Yeah, I mean, this thing's been a beast. We've liked it forever. We continue to like it. I like buying it above 450, to be honest. If we're above 450, I like this baby long.
So we're at
Nice and long with a target up near above 700. That's how I look at it. Look how we stopped at this 282 to a T. That was resistance. So that's the market, really recognizing these Fibonacci extension levels. So the market's recognizing these levels. Sometimes it does, sometimes it doesn't. But the fact that it is has me betting on the fact that it will continue to. So 450 is the level. If we're not above 450, I'd stay away. But if we're above 450, all day, baby, let's go. I think we got 300 points of upside. 250.
Your advice is like when you know the answer to something, like the answer, like you go to your brother and you're complaining whether or not you should break up with your girlfriend, you should, and you kind of go there and you're like, hey, let me tell you the story, and your brother is like, yes you should. And then you finally do, and then you go back to him, you're like, thank you, you were so right. I feel like oftentimes when people give you these stock symbols, like, do you think this is going up? And like all they really needed, like they know, like they everybody here is smart. They're smart because they're here, they're listening, they're learning, and they ask these questions, and they just needed the older brother to be like, yes, you're right. This is it. Sometimes it's tricky. Sometimes like, well, you didn't hear her side of the story, or you probably shouldn't have done this with her, with one of her best friends, whatever the case is. And so I like that, because a lot of the stuff is, and I feel the same way. I sometimes come to you and I'm like, hey, I'm thinking, yep, I was right. Great. Thanks, big brother. I needed that. Okay, so we also have Rosetta Stones. Did it just spring? Rosetta Stone. That would be RST.
I've got something I want to show you.
Okay.
I got two things I want to show you. Hold on.
Thanks, Archie, for the Rosetta Stone. I'm also curious on this one specifically, after just peeking at this chart.
Oh, just a peek, huh?
A little peek, see?
I actually, what I love about this is that we're looking at charts. I mean, I can't tell you the last time I looked at Rosetta Stone chart.
Yes, even better, Archie. Way to go. See, guys, this is no joke. We are literally just taking people's, you're welcome, Stephanie. We're just taking people's input here, real time, okay? Literally non-rehearsed. And so, JC, this is why you get paid the big bucks here. This is Tiger Woods' 18th hole, going even on Sunday. He's got an approach shot, 135 yards out. Is he going to put it close to the pin?
If this was golf, I'd say definitely not. All right, so Rosetta RST, is that what we're looking at?
RST, yep.
All right.
Mm-hmm.
What's the market cap on this baby?
735 million.
Really?
733 million to be exact. 733.35.
Interesting. Because Jeremy, I gotta tell you, we have this new scan that you don't even know about, dude.
Oh.
No. You don't even know. You've been so busy with your TV shows, you don't even know what we've been doing. Let me just share the screen real quick, and then I could just tell you what we've been doing. Here. So what are we looking at? I see a massive base.
I do too.
What I see, reminds me of the old Sir Mix-a-Lot. You know what I'm saying? I like big bases. Cannot lie.
I mean, this is a big base here.
I mean, what's there not to like? The bigger the base, the higher in space. You know, Edwards and McGee called these saucer bottoms. My friend calls them Kardashian bottoms, big bases. Like, they're all the same thing, you know, just, you know, the gold miners, right? You know, we were talking about the frustration if you bought it in 2012 or 2013 or 2014 or 2015 or 2016. Like, there was so much frustration. But from that frustration sparks those explosive resolutions. And I think we could see something similar here. I'd be a lot more comfortable being long if we're above 31. I'm not quite sure this is it. You might need one more little correction, but I definitely like where this is headed. But 31 is probably where I want to be. But Jeremy, we're really working hard at building bottoms up tools. You of all people know how much top down work we're doing.
Yeah.
A lot of global macro work. We do really well in that space, but we're really supplementing that top down work with the bottoms up approach. And we're creating new scans. Our under the hood is just off. I was gonna say off the charts, but I think that's a little too punny. The under the hood is ridiculous because all we're doing is that we're aggregating data from a number of sources, right? It started off kind of like with Robinhood and StockTwits, and then evolved into like a handful of other sources. And now we're getting new data. There's a lot of crossover, but having new data sets makes sure that we don't miss anything. Options activity. So we have a series of data sources that are really helping us identify what this universe is. And then what we do is then we add the human element. And then we just look for the stocks that we want to buy within that universe. So all the data does is it builds the universe, and then we dive in. So that's been working great, the under the hood. I think you were going to mention it, right?
Yeah, it's exactly what I was going to do right now. So the big thing is I just dropped the link for it. And this is what we just alluded to a little bit earlier today. If you want to get started with JC, this is the absolute best, bar none, entryway to get started with JC. What he just talked about is a culmination of years and years and years of work and the perfect timing of technology coming to age where he can leverage the ability to filter down. So JC starts with global macro, gets really big, cuts as much of the garbage out as he possibly can, does another huge cut, takes all that garbage, and it distills it down into amazing, amazing opportunities, investment vehicles, if you will. And if you want access to these vehicles in real time, this is a phenomenal way. He's making it a no-brainer. It basically comes out to be about $9 a month, a complete no-brainer approach to getting started with JC. I can tell you guys that if you do this and you get started, you're going to go and start an amazing journey. It's the same journey that I've been on since knowing JC, where you get filled with all sorts of great information, rhetoric about the markets. This could possibly be like big ideas that he's in the middle of baking that ironically, you can look at his blog. He posts it all on there, good and bad, right calls and bad calls, doesn't take it down. It's on there, okay? And you could see how these big ideas have transpired into some amazing opportunities. And he's getting so good with this top-down approach, leveraging the existing technology. It's scary. It honestly is scary. And so how do you sign up? Sesha, there's a link I just dropped. Let me actually do it to everyone. Here we go. I will drop it right here. There's the link to it right here. So this is the link. I just dropped it to everyone. That's the link, Sesha, that you can go and get started. Again, it's $9 a month. It's what it averages out to be. And this is the type of service, if you're looking for a way to get started in technical analysis, where you're going to use his approach. This is the same approach he's been using over and over and over now for weeks with me, live, real time, no script, real stock symbols that he pulls up, just like Rosetta Stone, and he calls this out. We've been taking notes every single episode. We will be releasing a hits, JC's greatest hits in the chart room.
Now we're talking. See, I didn't even know about the greatest hits.
Oh yeah, dude.
This is fantastic.
JC greatest hits, because but people don't realize. If you guys talk to me, this is not. So Sesha asks, is this for options and day trading? JC does have a service for options. This is not it. This is not day trading. We're not looking at this isn't what we do So thank you for asking that question. These are what he believes are the best investment opportunities. We may be in an opportunity. Listen, what do we want?
Workhorse like doubled in 2 days. So like, you know, simply as a function of what these ideas are, because let's remember what these ideas are. We get notification based on our algorithms and the data that we have. Basically, we're just getting a heads up that a lot more investors are focused on this particular stock than they were a week ago or 2 weeks ago. That's all it is, right? And now we have a universe of those stocks that may have not been on our radar prior. In some cases, there's a lot of overlap, right? Like, oh, we were looking at that anyway, that looks great. Oh, we were looking at it anyway, it looks like shit. You know, like there's a bunch of, like I would argue maybe 2/3 of the names were already on our, you know, half to 2/3 of our names realistically, we're probably looking at pretty regularly. It's the ones that are the ones that we would miss otherwise, you know, that are really big. And we're working on one now, I know we're talking about the under the hood stuff, but we're working now on a 5 to 100. I'll let you marketing guys come up with a better name for that, but we're looking for $5-10 billion companies that are going to be the next ones to get to 100. It's pretty cool.
It's so freaking sexy. I love that. And I want to say something to you, Sesha, because of the day trading note. This actually took me a while. I'd go back to JC over and over and over again and really ask him. I wanted to be definitive. How long am I going to be in this position for? Here's how JC looks at things. And I'm a huge fan of this approach now. So we just talked about Lululemon. If we say we like Lululemon and we believe it's a good opportunity to own Lululemon, again, that's not a solicitation. You do what you want with that. With JC's own money, if he's going to put it in there, and same approach if I'm going to put it in there, whoever, our mentality is, I want Lululemon to go to $1 million this year. I want it to go through the moon, okay? And if I think it's going to continue to go, why would I sell it? I'm going to just keep riding it. Now, when Lululemon doesn't look like it's going to go to the moon anymore, and it turns into a lemon, we want to cut it, and we may even want to take the opposite, and then we want it to go to zero, and we're going to be, so it's how long does the door open? How many games in a row will the Lakers win? Right? As many as they can, and we're going to ride that wave, and if it looks like they're going to lose a game or continue, you know, if we're going to turn a corner, then we get out, because we're looking for the vehicle that provides what he calls, this is JC's words, asymmetric risk-to-reward ratios. Simply put, what is the best, biggest opportunity for our money to grow with the probability of it losing money being the least? And there is no way that you can analyze as many companies as he does using any other approach besides technical analysis. You just can't do it.
That is true.
He set the record of his monthly calls going through 175, distilled down from 5,000. It's
the hard part wasn't running through the 175. It was narrowing it down to only 175.
Yeah, exactly.
By the way, just so you know, like this isn't like this morning I gave our India conference call, because we do the same technical analysis for Indian equities, and I think it was like 167 charts.
Wow. Yeah, it's a universal language, everybody. He can do this. It doesn't matter. And that's the proof. If the proof is that what gets baked into a price is baked into a price. And is it baked into the price in Japan? Is it baked into the price in India? Is it baked into the price in China? And the answers are yes, yes, and yes. You can take all the labels off of a chart, all of it off of a chart, show them a chart and this has got to be with a cap, a volume cap being at a certain price or a certain level, excuse me. Let him do his magic. And that link right there is your key to seeing exactly what kind of magic I'm talking about. So click on that. JC, do you want to do one more chart, or do you want to go into your parting words?
We need to talk about the revolution.
Okay.
Jeremy.
Bring it.
This is a fucking revolution. Never in the history of investing has there ever been opportunity like today. Since day one, the people with the most power and the people with the most money are the ones who had access to the information necessary to make more money. That has always been the case. There has always been high frequency trading. They may have been horses racing from the battles in the war to get to the person who will get on the next horse to get the information to the person close to the exchange to make the trade right. Those were the high frequency tradings of the 1800s, but that has always been there. This is the first time in the history of investing that we have a level playing field. The information is available to anyone. This is your first brokerage account. You manage $100 billion. Guess what? You have the same information. And you know what? I'm going to one-up you. The individual investor, for the first time in American history, has an advantage over the institution because the institutions are too big and liquidity is a problem and they can't be nimble. So they have the same information that you have, but they have liquidity issues that we don't. This is the first time ever that it's been flipped. We're the ones with the advantage. And if you don't see that, it's because you're not looking hard enough. It's because you don't want to see it. It's because you'd rather complain than take advantage of the situation. And it's quite obvious, Jeremy. Nothing has been more obvious to me ever that this is the greatest time in human history to be an investor.
And we are about to see the proof. Amen, JC. Amen. Well said. We are going to see the proof, ladies and gentlemen. Timestamp this team 6:08 p.m. Pacific Standard Time on August 20th, 2020. You said it first, JC. I couldn't be more in line with that. And it's inspiring, man. It's really, really inspiring. And for everyone who stayed late with us, thank you so much. I hope you are inspired by that. And congratulations for being the few that see the light, being the few that decide to do something about your future and where you want to go with your life, because that's the power. That's what JC is about. His why is about helping people get to places that they never thought was possible through the power of investing and using the smartest approach possible to that investment, to invest.
Our parents didn't have that opportunity. Our grandparents didn't have it. Our great-grandparents certainly didn't have it. You know, it's hard for them to even relate to how we see things. It really is such a beautiful time to be alive. It's magic before our very eyes.
It really is, man. This has been a privilege, JC. Thank you so much for your time and for your insights tonight.
Of course.
Be well, my friend. I will see you this time next week, but on the road. Take care. Thanks.